Hello and welcome to tune into Your Trades with me, Ankita Saxena, and this is the show where we get you the roundup of how the markets are fared today. Well, the market took Operation Sindoor, the top headline for the day, in its stride because Nifty managed to close above the 24,400 levels. So that's what the Nifty managed at. In fact, at one point we had dipped below those levels, but we managed to recoup those losses. In fact, we managed to close up above those levels. Also, in Nifty Bank, we managed to recoup those losses. We traded up more than 0.5%, 0.6% gain coming in on Nifty Bank. We were up almost 1.2% from the day's lowest point. Also, if you look at the broader markets, that's where the action was coming today. In fact, the mid-cap and the small-cap space, mid-cap fed 1.5% up, and small caps were also trading with gains of 1.3%. So it's basically the broader markets that saw the action coming in. In fact, it was outperforming the benchmark indices. As far as the sectors were concerned, we at one point we did see very few sectors in the green, but by the time we closed the market, we had FMCG and Pharma pack, the only packs who were trading in the red. The rest traded up in the green, especially like I mentioned, the mid-cap select, in which we had BSE surging away in the trade with gains of 6.5% in the back of strong set of Q4 results. But besides that, we also had a couple of other names like Paytm that soared on positive commentary coming in. Now, the results were rather mixed for the company, but it soared in the back of positive commentary coming in from the management. Also, we have a couple of other updates like U.S. Fed that is likely to hold up its rate. The FOMC meeting is in focus today, and of course the commentary that will be coming in from the Fed is something that we will be watching out for. Also, we had the big UK and India FTA deal that went through, and on the back of that, the entire textile pack was in focus today. Gokuldas Exports, we had Arvind Fashion that was buzzing away in trade. They were all trading upwards of 9% on the back of the tariff relief that came in as a result of the India-UK FTA deal. Tata Motors, again a big beneficiary of that, also surged in trade today. So largely that's how the market shaped up. We managed to recoup those losses. We held our fort, after the temporary blip. We managed to recoup those losses, and we ended the day pretty well today. But let's get on board. Amar Singh, who's the Senior Vice President, Research Angel One, joining us now. Hi Amar, thank you so much for joining us today. Amar, tell us what are the levels that you will be watching out for now that the big event is out of our way. We were waiting and watching out for this. And from here on, how do you see the markets move now? Have we priced in whatever counter strike that India was planning, and from here on now we can take a breather and move up now?
Yeah, I would say this is one factor which really we don't know whether it's come to a closure. If it has, then definitely that's a very welcome step. But we'll have to keep our fingers crossed at least for the next couple of weeks, because that's going to be very important. If something does go out of hand in terms of retaliation by Pakistan and whatever, then maybe markets would definitely react to that negatively. Having said that, today we definitely saw that markets were trading lower and there were weakness, choppy trading session. But towards the end, we saw that the banking space again came to the rescue, and we saw banks trading in the green, the likes of ICICI and others. So somewhere or the other, banks are definitely supporting the markets. Having said that, if you look at the broader view, you are right that we did witness almost double advances in terms of decline. So that shows that now across the board, small cap, mid cap also, we are seeing some buying coming in. As far as the levels are concerned, I would say as far as Nifty is concerned, if you ask me, the Nifty, definitely the short-term trend, intermediate-term trend, that is positive. On the upside, Nifty seems to be capped around the 24,500, 600 zone. That should act as a zone of resistance where we could witness some sort of selling pressure or some sort of profit booking. Whereas on the downside, 24,000 is a level where Nifty is likely to find support. Bank Nifty, on the other hand, has been more on the positive side, but there also we are seeing some sort of profit booking happening there. And till such time we don't see Bank Nifty trading below the 53,800 level, I don't see much of a cause of worry. Whereas on the upside towards 54,000 855,000 is an immediate zone of resistance. So it could be more of consolidation, but lower levels are likely to be bought into until unless we see this issue getting somewhat even bigger, because most of the other negatives have been factored in the market, and there have been some positive cues as well over the last few weeks.
Right. Amar, you did mention those levels, but also tell us about the pockets where you see value, which sectors are likely to now take charge from the front?
Yeah, I would say that sectors which are likely to do well. One is that defense as a sector is something which one can definitely look at. It had corrected significantly, and then we witnessed some sharp rally from those levels. So this is one sector. Any correction in this is a buying opportunity from a medium term to long term perspective. And I would say in automobiles also we are seeing some positive traction coming, and in automobile ancillaries in terms of tire stocks. But in the automobile space, I would say Tata Motors is definitely one stock one can keep a close watch on. It has corrected significantly, but now we are seeing that the stock is inching higher, also on the back of the latest, I would say, trade discussions between the UK and India. Apart from that, technically also the stock is witnessing a pullback. So this is one stock one can look at from the auto space, and other stocks also in the auto space are inching towards on the high side.
Right. So buy call coming in on Tata Motors with a target price of with the target price of 759, and Marico with a target price of 783. Thank you so much, Amar. On that note, we will let you go. But thank you so much for joining us today. But moving on to the word from the wise, then Vallabh Bhansali, the chairman of Inam Group, believes that all sectors will grow rationally in the next 10 to 15 years. He also believes that India is a growth story for next 30 years and advises to buy good companies in any sector. Let's go across and listen in.
I think all sectors will rotationally grow in the next 10, 15 years. We have seen amazing recovery in, say, cement sector. We have seen health sector, become so large. New sectors like data centers, etc., are, knocking on the door. So, and they are characteristically new kind of infrastructure. So infrastructure as a play, and then it can cover road building, it can cover EPC, it can cover equipment, so on. So I think India is a growth story for the next 30 years. And, if you can keep growing at 8, 9, 10, 11% nominally, it is inevitable that, as is very well known, that when economy starts moving, how the hard things move first, soft things follow, and then, the tertiary sector of beauty, cosmetics, services, travel, all of them follow. So I think this rotational move is here to stay. Buy good companies in any sector is what our philosophy is.
All right, that's the word coming in from the wise. But with that, it's time for us to slip into a short break. Don't go anywhere, we'll be right back. More on the other side. Welcome back. You tune in to Your Trades, and one of the top news for the day was, of course, the India and UK FTA that has concluded the free trade agreement. Let's take it across to my colleague Shrishti Sharma, who is standing by with the estimated impact on the likes of Tata Motors. Over to you, Shrishti.
Well, yes, India and UK have signed the much-awaited FTA deal wherein the automotive sector is expected to get a boost. Why so? Because in this deal, Indian automotive tariffs are expected to go down from over 100% to 10% over a period of time, and that could actually be positive for the luxury car makers, and especially for Tata Motors, because all these car companies from the likes of JLR, BMW, Mercedes, Rolls-Royce, Aston Martin, they have been importing the cars from the overseas market and definitely from UK, and in that the tariff relief is expected to give some relief for the customers and help increase the volume. But how big an impact it could have on Tata Motors, let's try and find an answer to that. Therein, for Tata Motors, actually India business represents 1.4% of the total JLR volumes, because JLR actually sold over 6,000 units in FY25, and in that almost 10% of it has been imported. So as we know know that JLR is a luxury car brand. The cars ranges over 70 lakhs and goes in crores. So on that, import duty relief will actually give some relief to the customers, but given the fact that the volumes are significantly low and India business does not form a major part of the overall Tata Motors JLR revenue. So given that fact, the impact could be quite limited on the back of this FTA deal, but indeed a step in the positive direction, especially for the automotive industry. Back to you.
Direction, especially for the automotive industry. But keeping it with the India-UK FTA, then it does not look like the Alcobev industry will run in high spirits on the back of the FTA. My colleague Ashesha is joining in with the analysis.
Well, absolutely. Alco beverage industry is in focus today. But before that, let's also talk about textile, because this deal is a positive for the entire textile sector as well. Currently, UK imposes nearly 12% import duty on textile products that are exported from countries like India. And after this agreement, it will be a big positive for Indian textile exporters. In fact, analysts also say that most of these textile companies will also be expanding their capex plans because market has now turned conducive. In fact, both US and UK market have turned conducive for Indian textile exporters, and they will be able to export to the UK without compromising on their margins. And remember, they will become competitive in the global market, especially in the UK market. Currently, we have players like Bangladesh, Vietnam, which export at 0% export duty to the UK, and now Indian players will also become competitive, and that's a positive for the entire textile sector. And as you mentioned, alco beverage industry will also be benefited, although for players like United Spirits, it will be a two-way impact. Remember, competition from premium whiskey is expected to increase in the domestic market, because of which all of these domestic whiskey producers will be negatively impacted on account of rising competition. But for United Spirits, there will also be a positive impact, because the Scotch BIO, which is bottled in origin, which was being sold by United Spirits, will now be imported at a 75% tariff versus 150% that was being levied earlier, which means their volumes are expected to inch higher. But for the other part of their portfolio, competition is expected to rise. But for now, analysts expect United Spirits is going to positively be impacted, and volumes are likely to inch higher. In fact, Elara is penciling in 33% CAGR volume growth till FY27. Margins, however, for the BIO Scotch whisky is capped at 10%, so perhaps margin and profitability expansion will be restricted to some extent. But all in all, volume growth is likely to be a positive for players like United Spirits, although for other whisky manufacturers, competition is likely to increase in the domestic market.
All right, moving on then, the Scotch MRP, which is likely to decline by 10 to 15%. That's the word coming in from Karan Taurani, who's the Senior VP Elara Securities, and Ananta Iyer, Director General, CIABC. Let's go across and listen into what they had to say about the impact of the historic India-UK FTA deal.
MRP will see a cut as far as duty paid Scotch in India is concerned, but the fall is not more than 10 to 15% in our assessment as of now. Now, what this does is that this will obviously give a lot of fillip to Scotch volume growth. It will kind of get the prices of upper prestige and the entry-level luxury segment closer, in terms of gap. So United Spirits will be the big beneficiary out of it as far as volume offtake is concerned. But I think if you look at their business model, the bottled in origin, the bottles which are there, which in terms of the parent arrangement with Diageo, the profitability and the EBITDA margins are capped there. So this will give fillip to growth, but as far as profitability is concerned, it's going to have a negative impact in terms of EBITDA margins, which means that effectively the net positive impact will be very small for United Spirits.
The UK-India FTA is a mixed bag for our industry. We had definitely recommended that, there could be a drop because, we have been in negotiations and the government has, reached out to us. The 75% reduction will be obviously helpful to all the importers of bulk Scotch because, yes, a lot of Indian blended whiskies do put in bulk Scotch. So all the manufacturers and marketeers of IMFL will have a benefit in terms of the bulk Scotch. However, the bottled in origin drop without a concomitant minimum import price kind of a cap may and could lead to a surge of cheaper Scotch whiskey, flooding our country. And if the same template is followed for other, countries, especially in the EU as well as the US or Australia or New Zealand, where wines are a very predominant category, then the Indian wine industry could get adversely impacted because no one gets bulk wines per se, but they will definitely get bottle in origin, and that could create issues.
Right, but moving on to a couple of names that were in focus today, besides, of course, the names that were impacted by the India-UK FTA deal, a couple of other names like KEI Industries, BSE, Nazara Tech, NLC India, Avenue Supermarts that were in focus today. And to give us a lowdown on why these stocks were in focus, let's go across to my colleague Rabinder, who's joining us with all the stocks in focus.
Well, yes, back of a strong Q4 number, KI Industry is in focus, where company reported a revenue at rupees 2,915 crore, which was up by 25% year-on-year basis. And if we talk about EBITDA, then EBITDA also saw a good uptick of 18% year-on-year basis. So overall, KI Industry reported a strong set of number in Q4. Moving to next, BSE were also in focus on back of Q4 number, where the company reported a revenue at rupees 847 crore, which was up by 10%, more than 10% on quarter-on-quarter basis. And if we talk about PAT, then company's PAT increased from 219 crore to 494 crore on a sequential basis, and EBITDA margin also saw a good uptick from 30.7% to 70.1% quarter-on-quarter basis. Moving to next, Nazara Technology were also in focus, where Nazara owned Next Wave Multimedia partners with Winners Alliance to bring 500 plus pro players to the World Cricket Championship game franchisee. Apart from this, NLC India were also in focus, where NLC India Renewable Energy, which is a wholly owned subsidiary of NLC India, signs a power purchase agreement for its largest solar project, 110 megawatt at Solar Park, Rajasthan. And lastly, on back of brokerage note, Avenue Supermart were also in focus, where HSBC has come out with a note on Avenue Supermart, and they have reduced the stock. They have downgraded the stock to reduce from hold and cut target price to rupees 3,500 from 4,500 to per share, and they have cut the FY26 and 27 EPS estimate by 19 and 21%.
All right, moving on then to another counter that was in focus today, and that is CG Power. But now they have strategically been expanding portfolio. That's the word that came in from Amar Kaul, who's the MD and CEO of CG Power. Let's go across and listen in to what he had to say about the margin expectations as well.
We have been strategically expand our portfolio. Portfolio is, if you see, we acquired couple of quarters back GG Tronics as a joint venture majority shareholding in that, which is to gain on the technology of Kavach, which is train collision avoidance system. So that adds to it, which is currently under execution. So one is higher margins. You have to work on getting there, improvement. For example, nobody thought about the power sector. That's one of the segments that we have. The kind of margins you are getting there. It's also, one is the market, of course, is favorable, but second is also your operational efficiency. So continuously, lean has been our DNA, which we are working in to keep eliminating the waste in the system, because customers don't pay for that. So the more efficient, operationally efficient we become, better it is for us to gain on the margin. Number one. Number two is also for future. If you see, one is the core area of capital allocation, and second area of capital allocation is also in the strategic investment, which is our semiconductor business. So once that starts kicking up, you will see both top line and bottom line improvements happening.
Moving on to the next counter that was an earnings candidate that was in focus today was Paytm, that came out with a mixed set of Q4 earnings, where the revenues declined on a sequential basis while the losses actually improved. My colleague Gaurav is standing by with all the number crunching for us. Paytm was in focus, was trading one of the top gainers in trade today. Let's go across to Gaurav and find out what's the report card for Paytm.
Well, yes. When it comes to Paytm, when we look at the stock performance, it is up in trade today, and there are two main reasons. First is that Paytm has actually turned EBITDA positive if we exclude that ESOP cost, and second is that the management has now said that Paytm will also turn profitable in Q1 FY26. So first, let's understand the numbers. When we look at revenue, that increased only by 1% on a sequential basis, but let's not forget that in this quarter, Paytm actually reported UPI incentive gain worth 70 crore rupees, and as a result, when we talk about the contribution margin, there we have seen an uptick of around more than 170 basis point on a sequential basis. Other than that, a key highlight for this quarter was that ESOP, and if we exclude the ESOP cost, EBITDA has turned into a positive number of around 11 crore rupees, and if we include that UPI incentive of 70 crore rupees, now EBITDA positivity is as high as 80 crore rupees for the quarter. Other than that, when we look at profitability for the company, now although company has actually reported losses of around 22 crore rupees, if we exclude the exceptional items in this quarter, let's not forget that in this quarter, Paytm actually reported exceptional item worth 490 crore rupees regarding the ESOP cost and around 30 crore rupees towards the other impairment charges. And as a result, when we look at the actual reported number for profitability, Paytm reported losses of around 545 crore rupees. When we look at the numbers, those were actually higher than what the street is expecting in terms of EBITDA and profitability. And lastly, company is also saying that the profitability, the losses in terms of the profitability of the company has now gone down, and that is actually going to be sustainable because reduction in ESOP cost is going to be there. Other than that, operating leverage will also play out in terms of profitability. And the key highlight once again is going to be that Paytm said that they will turn into a profitable company in Q1 FY26. In fact, they have also reiterated their growth guidance of around 30 to 35% in terms of top line and around 10 to 15 to 20% in terms of EBITDA. So definitely a very positive commentary from management also, and on back of this we saw a very positive uptick in the stock price today.
All right, with that, it's curtains done on this edition of Your Trades. I'll take your leave. Thank you so much for tuning in.